The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Bolin, and I am the aggressive growth stock strategist here at Zacks, and I am here with two more stocks that should be on your aggressive growth radar. First one, as you can see, is Air Transport Services Group. The ticker is ATSG. It's a Zacks rank #1 strong buy and has an A for growth and a B for value. Normally, I like to see an A for growth and an F for value, which shows me that I'm on the right path immediately. But in this instance, it's okay that we have a good value score as well. If we take a look at why this one is a Zacks rank #1, we can see that the earnings estimates have been moving higher. We can see 90 days ago, the estimate for this year was $1.15. It's moved up to $1.27. And the estimate for next year has also moved up from $1.33 to $1.43. We can see that there has been a good history of beating the number here with this stock with an average positive earnings surprise of 18% over the last 4 quarters. If we take a look at the chart here for Air Transport Services Group, we can see it's up, and away for this stock. Really a big move here in early 2017. And that was pretty much the start of this earnings beat cycle that we have. So 4 beats in a row. Earnings estimates, you can see really good growth here. Really, the big gap between these colored lines, and these are earnings estimate lines throughout these years, the corresponding years, we can see a big move up between 2017 and 2018 numbers. 2019 numbers are still a little bit fresh, not necessarily on this chart just yet, but they will be pretty soon. So obviously this is a good stock to keep on your radar screen. Next up is Columbia Sportswear. This is also a Zacks rank #1 strong buy and has an A for growth, as just about all of these stocks will have, and a C for value. If we take a look at the estimates as to what has been going on here, this one has moved up from 304 to 325 for this year, and just a small move up for next year. But for the Zacks rank, it's really just the idea of positive momentum here, positive estimate revisions higher. So 351 to 358, while it's just 7 cents small percentage-wise, it's still an increase. We can see that this company has also been beating the Zacks consensus estimate over the last 4 quarters with a positive average surprise of 16%. And when we look at the chart here, the stock was really doing a whole lot of nothing for the most part of the last, 2.5 years, almost 3 full years here. A choppy up and down 2015, but 16 and 17 for the most part were held in check in here in a pretty tight range between 50 and say 64 thereabouts. But a breakout here, and we can see this line here for the 2018 estimates where they have really, while they were flatlined here, they've really broken up, and away here. And a lot of that is probably the tax reform idea, and that's what's pushing this stock higher. Well, that's it for this week. Join us next week when we take a look at 2 more aggressive growth stocks to put on your radar screen.